makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Well, the yen punches through 160 per dollar to its weakest in 34 years before rebounding strongly and raising speculation that authorities may have intervened. The U.S. Secretary of State, Antony Blinken, will step up efforts today to secure a truce in Gaza during meetings in the Middle East as Israeli forces continue to prepare for a possible attack on Rafah. And Elon Musk's quick visit to China is paying immediate dividends, with Tesla clearing two key hurdles to introduce its driving system to the world's biggest auto market. Now, good morning, everyone. A lot going on. Certainly a lot of the focus, of course, is on yen. But overall, the bigger picture is that we have a possible sweetened offer from BHP. There is the Fed, of course, on Wednesday. So a lot also, of course, on data analysis and some of the things that we need to keep an eye on. But it is really all about the yen gyrating after a drop to the weakest since 1990. Again, I guess the focus is, of course, as Japan takes the day off, the currency came roaring back late in the Asian day to reverse an earlier collapse that sent it past $160 to breach yet another psychological milestone. Now, just keep in mind that the local public holidays, thinner liquidity probably also acted to amplify some of the swings in the currency. So for more on all of this, let's get straight to Aneeka Gupta, Director of Macroeconomic Research at WisdomTree, and with me here in the studio, Justina Lee of Bloomberg. So thank you both for joining us. Justina, I mean, it gives you a headache just looking at yen and kind of what it's doing.
Yeah.
Have we seen intervention?
Yeah, I think that's really is the big question here because, I mean, I feel bad for Japanese traders because it's actually a holiday there today. And what that usually means for markets is, of course, that liquidity is thinner to begin with. And so there are some voices in the market saying that it could just be a result of that exacerbating maybe, you know, kind of some short covering or things like that. But at the same time, I mean, it is a big question because we know that the Japanese central bank is watching the yen. And when a top currency official there got asked about this question, I mean, he said, you know, no comment for now, which is sort of the most frustrating question. And I think, you know, anyhow, it would be a big dilemma for the central bank, given that you don't want the yen to weaken too much. But when it's the result of fundamentals, it's very hard to just solve with, like, you know, one move or two.
Yeah, so, Aneeka, I mean, you know, the other feeling is that actually this could be bearish bets that have been put in place also ahead of the Fed on Wednesday. Like, how do you look at this huge yen move?
Yeah, absolutely. A very good morning to you. You know, at the April meeting with Governor Ueda, markets were really looking forward to any sign of FX intervention. And it was surprising that he actually mentioned that the yen, the weakness of the yen isn't really having an impact on inflation. And the markets perceive that as extremely surprising because we were expecting to see some intervention given the yen moving into free fall, especially this morning. I think any attempt of FX intervention is going to be quite futile, given the fact we have the Fed meeting, U.S. yields are going higher, we're seeing interest rate differentials widen even more versus the yen. And I think it's going to be hard for the Bank of Japan to keep a lid on yields for GGBs alongside keeping the yen stable.
Thank you. Just, you know, the Bank of Japan last week indicated, of course, that these financial conditions also will remain easy. Policymakers have also repeatedly warned that depreciation will not be tolerated if it goes too far too fast. Are they targeting a level, or is it really how quickly, you know, it falls?
Yeah, I think one thing that they did point out is they are kind of looking at whether it's excessive weakening and whether it's kind of happening too quickly, too fast. And that's potentially something that they saw happen today. And I think if you look at a lot of fundamental currency measures, right, like if, you know, all the metrics that economists look at to compare currency movements with fundamentals, it is indeed the case that in terms of fundamentals, the yen does seem to have kind of weakened excessively. But of course, if you look at, you know, where yields are going, I mean, with the Fed meeting coming up this week and them potentially having to address U.S. inflation still being stronger than expected, then it's kind of hard to see why this kind of trend of yen weakening can be easily reversed.
Aneeka, when you look at, you know, some of the pictures that are kind of ingrained in our memory, it was only earlier this month that the finance minister of Japan flagged these concerns over the yen's decline to the U.S. Treasury Secretary Janet Yellen. What are you expecting from the Fed this week, and will that be unhelpful for the yen further?
I very much think the comments coming in from the Fed on Wednesday are going to be very unhelpful for the yen. I think the Fed, given Jay Powell's comments over the past week, he has been reiterating that they haven't got enough confidence that inflation has come down comfortably towards the 2% mark. And I think that's going to give them good enough reason to keep rates higher for longer. And that's why I think the Bank of Japan has hesitated so much before actually intervening, because they know that any attempt to actually intervene is going to be very short-lived. And given the strength of U.S. yields that we are beginning to see, that's going to put further pressure on the yen over as the week plays out.
Yeah, and Justina, this is a concern, right? Is that actually intervention alone cannot really alter the wide gulf in interest rates that's in part driving this.
Right, exactly. And it's not just Japan, right? I think we see some of that, concern, for instance, like in China, too, where, the yuan has stabilized a bit. But I think the worry everywhere is that, you don't want your currency to weaken too much, because that, logically is supposed to have some effects on domestic inflation. But at the same time, that's kind of where the different trends in economic growth is pointing to.
Justina, what are you expecting again from the Fed? And we heard from Janet Yellen. I think she was also flanked by the finance minister of Korea in kind of saying, look, intervention won't really be frowned upon.
Yeah, I think it's sort of a big question now, with kind of the U.S. sort of having very different trends from everywhere else. And I think this week people are really looking to kind of how the Fed is going to address the inflation numbers that we have gotten kind of over the past couple of months. We're not getting an update on the dot plot this week, but then it's going to be a really big question here, because the last time we looked at that, it does seem like the Fed on the margin was still kind of expecting maybe 2 rate cuts this year. Now, even traders are not really expecting 2 rate cuts this year anymore. And so based on everything we've heard from Fed officials so far, they're really kind of pushing back on kind of those cuts as well.
Aneeka, I guess the question, and I know there's one, for the moment, quite a lonely voice saying that the next move could be up for the Fed. But is there a chance that we see a hike instead of a cut?
I don't think so, Francine. I don't think a lot has changed fundamentally from that disinflation narrative. There are a number of reasons to downplay that acceleration that we've seen in core PCE. There have been a number of one-off factors, be it the Jan effect. There's also still very, very strong reasons to expect slowdown in rent, owner's equivalent rent as well. We've been looking at this and we've been noting it many times, that the official numbers continue to lag behind reality. I also believe the rebalancing in the labor markets is still underway. We've already seen a continued downtrend in job openings, in quits. We've also seen a downtrend in wage measures and inflation expectations remaining, and that should keep inflation expectations remaining anchored with a return to a 2% inflation level. So I do believe we have plenty of data coming in between now and the next meeting. I think July seems a bit unlikely, but there is still a possibility, even though the markets are pricing in next to no rate cuts until November. I think the September meeting is still open.
Okay, Aneeka and Justina will stay with us. Let's also go to Ven Ram from Bloomberg's MLive team for more on the yen's volatility. And Ven, we were having a great discussion, actually, how the Fed would view this yen volatility. But first of all, just on yen levels, is it impossible to call it bottom? Is it like catching a falling knife?
No, I would think that we are closer to a bottom, Francine, because, the kind of sharp moves that we have seen in the yen, whether it's intervention or whether it's just market jitters, it kind of shows that the markets are kind of thinking like, look, the dollar-yen cross has gotten too toppy for comfort, and there are jitters that the authorities will come in at these levels. And as long as those jitters prevail, I don't see the dollar-yen pushing above 160.17, which was the top that we saw earlier this morning. We have seen as a very wide 6 yen range in the dollar-yen cross this morning, and that is extremely unusual. And we have seen it only a handful of times, in fact, since since the pandemic. So these are not normal times, and that shows the heightened jitters that we see in the markets, and that will put a floor on the yen going forward.
How do you see intervention then?
Well, I mean, it's Masato Kondo, the top Japanese official, was asked about intervention. He refused to comment. But look, I mean, it's hard to tell from just today's action whether they have been in the markets. I mean, for one, Japan is closed today, so it could just be algo-driven moves, and there's holiday-thin volatility. So there's a lot going on in that market. So it's just hard to call whether or not they have been in the markets. But, we will get to know from the MOF figures later at the end of the month whether they've been in the markets. And if they have been, and I think it's about time, because, the dollar yen is trading like a frontier market currency with these kind of sharp moves intraday. It's very, very uncharacteristic of a G10 currency. And it's about time the officials intervened in the markets to restore some order.
Ven, thanks so much. Ven Ram there from Bloomberg's MLive team. Now, we'll get back, of course, to macroeconomics and talk a little bit more about some central banks' move. Back to corporates and Philips shares soaring in Amsterdam after the company set aside $1.1 billion to help settle U.S. claims linked to a recall of sleep apnea medical devices, much lower than what analysts had actually expected. Well, you can see Philips shares having an incredible move in today's trading session, gaining some 35%. Coming up, traders look to Wednesday's Fed decision and Jay Powell's comments for any clues on rate cuts. We take a closer look next, and this is Bloomberg. Now let's return to our discussion with Aneeka Gupta, Director of Macroeconomics Research at WisdomTree and Bloomberg's Ana Gupta. Thank you both for sticking around. Aneeka, there's a lot going on, of course, with commodities and geopolitics. We understand that Anthony Blinken is in the Middle East to try and get a truce. We haven't really seen it play out that much on oil. What's your take on the price of oil and what that means also for inflation going forward?
Well, we're seeing some easing of geopolitical risks after it, reached an all-time peak the week before last. However, if you look at the physical market, we are seeing signs of tightening. That's quite evident with the prompt time spreads. And that's just showing that, the strength in the spreads is very aligned with our oil balance, which continues to show a deep deficit over the second quarter of the year. And that should, help provide further tailwinds for oil prices as we move into the second half of the year.
I mean, there's so many just, unknowns, not only the price of oil, but there's gold. I mean, we look at these macro events and kind of try and make sense of the market moves afterwards.
Yeah, I mean, gold is kind of interesting because, we are kind of seeing a bit of a retreat right now because of kind of rate cut expectations being pushed back. But of course, all year long, we've seen this rally despite that. And part of that has to do with a lot of, maybe not macro reasons, maybe about kind of like central banks accumulating purchases. But, I think you make a great point, which is that on one hand, we are very concerned about the macroeconomy. But on the other hand, in the stock market, for instance, a lot of people are looking at more structural trends that in a way are sort of like untethered from the business cycle. It's more about, are we all going to be investing in AI and in cloud services regardless of where the economy goes?
Aneeka, you also look at some of, you look at gold in detail, and I know there's speculation that there could have been a big buyer, maybe a central bank, although nothing of this is confirmed. But if you look at silver, copper, also at 10,000, when you look at the commodities complex going forward, is that really a demand concern, or is it just that we don't have enough supply?
Well, on the metals front, Francine, we are seeing signs of, less supply coming into the market. We have seen a number of mining projects being mothballed, be it in Australia, be it in parts of Chile. We have seen signs in China of smelters, the amount that the mine is actually being paid, dropping to a trickle. So even, prior to the run-up of metal prices, we were seeing the market physically tightening. I think on the precious metal side, I think where the most of the strength has been coming from has been gold. Silver, palladium, platinum have really been playing catch up to gold prices. And in the case of demand for gold, clearly there's been a lot of strength coming in from the speculative market, on the futures market, but we're also seeing strength on the physical market from central banks. And surprisingly, China in particular, not only is the PBOC, ramping up its purchases of gold, but we're also seeing retail investors, they're moving away from property markets, but looking at gold as a better sign of, of strength and more of a safe haven asset in these times of uncertainty in China.
Thank you. Aneeka, when you look at some of the earnings, Justina, I mean, I know we saw, for example, some of the banks, for example, helping Italy and Spain overall have a better earnings season. But it's unclear. I mean, if you're a winner, you've done okay, but there's also a lot of cost cutting there.
Right, exactly. And I think what we're seeing in markets is that there's been some really strong positive reactions to really great beats, as we saw in Microsoft and Alphabet's case last week. But at the same time, there also have been some really strong negative reactions. And I think that speaks to the fact that in the U.S., the market has already run up a lot. And so to kind of really surprise markets, I mean, the bar is pretty high out there. But overall, it's actually still been a pretty solid earnings season. I mean, in the U.S., about 45% of S&P 500 stocks have reported and 80% have beat so far. And so it's pretty incredible that at this point in the cycle, we're still seeing those numbers. And at the same time, if you kind of look at what corporate executives are saying, I mean, their comments are not that negative just yet.
Yeah, so interesting. Thank you so much, Justina. Aneeka Gupta there from WisdomTree and Bloomberg's Justina Lee. Now, coming up, Elon Musk makes a surprise trip to China to see driver assistance software. But is that enough to help Tesla's revenue? We'll have plenty more on that story next. And this is Bloomberg.
It's good to see electric vehicles making progress in China.
Live images there from Riyadh, where the U.S. Secretary of State, Antony Blinken, is currently meeting with the Saudi foreign minister on the sidelines of the World Economic Forum summit. Now, Blinken is in Saudi Arabia, where he's expected to step up efforts to secure truce in Gaza in what could be a final chance to persuade Israel to call off an attack on Rafah. Now, Elon Musk's unannounced trip to China seems to have paid off, with Tesla clearing two key hurdles to introduce its driver assistance system in the world's biggest EV market. Now, let's get more on the story with Bloomberg's Global Autos editor, Craig Trudell. Craig, I mean, this is an amazing story. I know you haven't had a free weekend in a while because Elon Musk just kind of does things when he wants to and doesn't announce it in advance. But what was the reason for him going to China all of a sudden?
He needed this. I mean, he needs a revenue boost. And I think, Tesla's weak first quarter sales really caught everybody off guard. I think there was some concern about a real growth slowdown, given Tesla's own forecast. But this wasn't just a growth slowdown. This was a contraction, right? And so revenue was in decline and sales dropped despite the fact that this company has been cutting prices left and right for more than a year now. So this driving assistance system is a way for them to get incremental revenue out of each car they sell. And it's something that they've been offering in the U.S. for some time, but have not been able to put to market elsewhere in the world.
So this is a sales pitch. He shows up to China. So we know that he met with the premier. But who does he show the software to? And has he had the stamp of approval, or is he waiting for it?
The stamp of approval is still not a sure thing. It certainly seems, as we mentioned off the top, that there's serious progress toward them getting the okay. But this is something that's been in the works for a while. Actually, going back to when Musk last visited China, this was something that was on the agenda that he was looking for. And it is sort of the way that the industry is competing now, in the sense that, if you can automate certain driving functions, make cars safer, you really can sort of, have a leg up over the competition. But China is kind of viewing that as the new frontier beyond just, trying to electrify the industry. They also want to automate more of the driving that's on the road. And, in order to do that, in China, you're going to need to work with China. So in this case, Tesla needed to do a deal with Baidu for mapping and some of the services that they provide to support these sorts of systems.
Is that, if not strange, something that we need to look into a little bit deeper? Is it surprising?
What surprises me is not necessarily that they had to do this, because this is very sort of par for the course in China. When the EV market was in its infancy, if you wanted to sell EVs, you had to procure batteries from Chinese suppliers. What surprises me is that Musk in the past has talked about the idea that mapping systems to support these sorts of driver assistance features is not the way to do it, that it renders them brittle. If you have to rely on maps, your cars are not going to be able to handle what comes. And so it is a little bit surprising that his line that Teslas don't need mapping kind of goes out the window when China says, no, you have to do this.
Wonderful analysis, Craig. Thank you so much, Craig Trudeau. There are Auto Tsar coming up, but we're live in Saudi Arabia for the World Economic Forum. This is Bloomberg. Well, the yen swings after earlier falling to its weakest level in 34 years, raising speculation that authorities may have intervened. U.S. Secretary of State Antony Blinken will step up efforts today to secure a truce in Gaza during meetings in the Middle East, as Israeli forces continue to prepare for a possible attack on Rafah. And Elon Musk's quick visit to China is paying immediate dividends, with Tesla clearing two key hurdles to introduce its driving system to the world's biggest auto market. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the U.S. Secretary of State Antony Blinken is meeting with Saudi Arabia's foreign minister in Riyadh ahead of Gaza truce talks as Israeli forces continue to prepare for a potential Rafah attack. Well, let's get more from our Middle East anchor, Jumana Bertseche, who's at Saudi's first World Economic Forum meeting, where geopolitics is, of course, in the Middle East dominating the agenda. Jumana, great to have you on the air, and welcome to Bloomberg. So what's the mood at this West special meeting in Riyadh, given the conflict in the region?
Good to see you, Fran, and good morning from Riyadh. Well, as you said, the U.S. Secretary of State Antony Blinken landed here just a couple of hours ago. As we speak, he is having a bilateral conversation with the Saudi Foreign Minister, Prince Faisal. He's also expected to have conversations with other leaders here. We've got the Jordanian Prime Minister, Egyptian Prime Minister, other GCC representatives too. Also notable, the leader of the Palestinian Authority, Mahmoud Abbas, is also here at the sidelines of WEF. And crucially, the backdrop to this is the future of Gaza. Discussions are taking place to find a truce between Israel and Hamas leaders, an agreement on the exchange of hostages, of course, details to be worked out. And then very important from the Palestinian perspective, for the U.S. to exercise some sort of influence or control in Israel so that they don't go ahead for this widely anticipated offense attack on Rafah. So a lot of issues at stake here. But I would say, Francine, geopolitics have been dominating the World Economic Forum summits. I know you've been to many of them yourself, and typically you talk about growth, energy transition. Today, it is all about the geopolitics. And I had the chance to moderate a panel with the managing director of the IMF, Kristalina Georgieva, yesterday, alongside the Saudi finance minister, His Excellency Mohammed al-Jad'an. And he said that the biggest risk to the region right now is geopolitics.
It is very, very unfortunate to see loss of lives, wherever that is. Civilian lives are important, whether it is in Ukraine or in Palestine or elsewhere. You need to make sure that you actually de-escalate and do everything we can. In Saudi Arabia, I can tell you, for the last several years, we made it a very clear strategic objective that we de-escalate in the region. The region needs stability.
I think the messaging is quite clear from the Saudi perspective now, and I would think that those are the types of discussions that are taking place between the Foreign Minister and Secretary of State Antony Blinken, and that they want a de-escalation. De-escalate, de-escalate, de-escalate. That has been the messaging from the Saudis, but of course, alongside other Arab states here, they want to see an end to this war. They want to work out the details and talk about the future of Gaza. So lots of high-stake political discussions happening here, Francine, alongside some of the key economic issues at play as well.
Jumana, thank you so much. Bloomberg's Middle East anchor there, Jumana Bertreche. Now, we'll have lots more from Riyadh this morning, including an interview with Saudi Arabia's Minister for Economy and Planning. So stay with us for that. Now, let's get more on Blinken's trip to Saudi Arabia with Rosalind Matheson, Bloomberg's MEA News Director, and Lindsay Newman, Practice Head of Global Macro-Geopolitics at Eurasia Group. Thank you both for joining us. Ros, let me start off with you. I mean, the U.S. is pushing for, this truce in Gaza. They're also pushing for the release, of course, of hostages as Antony Blinken is in the Middle East. Will he do any headway?
Well, this is his seventh trip to the region in recent months. And obviously, again, the US and other countries are pushing hard for a breakthrough in those talks for a ceasefire. And that's important because without a ceasefire, without an agreement to have this hostages exchanged for Palestinian prisoners and a truce in the fighting, Israel's made clear it still intends to go into Rafah. With a ceasefire, of course, that the Rafah offensive gets pushed off indefinitely, if not permanently. So that's the imperative to get this done once and for all. We do know that there are, again, talks going on. There are small signs of progress in that. But the problem, like the Qataris who are helping mediate, say again, there's not any goodwill on either side. So they both need to meet each other somewhere in the middle, but no one really wants to sort of make the most ground to get there. And so you've still got fundamental differences that have to be dealt with. Some of it is just around, again, the status of the hostages, where they are, who they are, how can they find them, even that kind of basic information, and the requirement for how long would that ceasefire go for, where do Israeli troops go during all of that. So there's still big questions around it, but certainly a sense of time pressure involved when it comes to the talks that are going on and the involvement of the US.
Lindsay, are you optimistic about something meaningful happening this week?
Thanks, Francine. Of course, until just this weekend, optimism had really receded. It was high during February and March. We have President Biden saying that he expected a ceasefire imminently. That did not happen. So we've seen this storyline before. And before this weekend, we were expecting that the signs out of Israel were that a Rafah offensive was imminent. So we have to be cautious, but there are indicators that Israel has potentially softened its view, changed its view on some of the key points that Hamas have been asking for, including around the ability of Palestinians to return to the north, around the number of hostages that would need to be exchanged for a ceasefire, and very importantly, if true, around the duration of any ceasefire. There's been reporting that it could be perhaps more persistent than all prior proposals had allowed for, which of course is a key sticking point for Hamas. So very cautious. It's too soon. It's too soon to tell, but Israeli officials have said that should a ceasefire be reached, they would at least temporarily abstain from that Rafah invasion. The signals are mixed, though.
Lindsay, what's your baseline view actually on a possible Rafah offensive?
Our view had continued to be of a quite significant 55% likelihood of a regional security crisis where the conflict continues to be contained in and around the Gaza theater, in and around the Rafah offensive at the moment. We've seen over this weekend, again, further trading of activity in the northern border. That could be a pressure point that's playing at heart right now for Israel in terms of its decision and position around the ceasefire arrangement. But until this weekend, we continue to see the Rafah offensive as imminent. It seems as though it is still likely, but it could be delayed.
Ros, I mean, we heard this weekend about, possible warrants from the International Court of Justice. I mean, does that change the viewpoint or the standing of what the Prime Minister of Israel is thinking?
Well, it's interesting because, of course, we have the separate ICJ issue, which is South Africa accusing Israel of genocide. The ICC is the court that can actually have the ability to get leaders arrested. And the most famous arrest warrant in recent years is Vladimir Putin for his war in Ukraine. So if this does happen, it's a big if, because we don't know exactly where those investigations are or how fast they're proceeding. There's no imminent sign that they're going to issue arrest warrants or charges for anyone, Hamas or Israel, for the war in Gaza. But if they do, especially if it's Benjamin Netanyahu, that's a hugely symbolic moment and a big blow for Israel. Again, shows that hardening of the global view around this conflict. And so if it does happen, it's a big deal. And Israel, of course, will view it as a fundamental attack on Israel. So again, you're just getting that bifurcation that would show around the world.
And Roz, is there this Russian-Iran military alliance, and how concerning should that be for Israel?
Well, we've seen signs of that in various ways. We've obviously seen Iran supporting Russia militarily with its war in Ukraine, sending a lot of equipment to Russia to use, including drones and so on. And we've seen a long-standing relationship between Russia and Iran. And that's been a real concern, not just for Israel, but for the US and others. How solid is that relationship? How tangible is it? And does it also involve China at some point? Because that's the real concern. Russia, Iran, China supplying each other in different ways with weapons, doing economic activity with each other, trading with each other, using energy potentially in that as a weapon. And so you've got that concern that they're working more and more closely together. Beyond Israel, it's a real concern for the US.
Lindsay, China seems very critical and crucial in all of this. We're, of course, in a US election year. I want to ask your thoughts on that, but we're seeing a lot of China bashing from the U.S. Antony Blinken also asking questions. What role does China play in the stabilization?
Yeah, of course, we had Blinken's visit just over the weekend to China, the first visit in 10 months, and it followed on from an earlier virtual call between President Biden and President Xi. The expectations were not particularly high around that visit, and those expectations were met. As you say, we have to contextualize this within the broader recent engagements. This is a relationship that is in a managed decline. Both sides are looking to focus domestically in 2024, the U.S. because of the election, China because of various factors, including its economic outlook and its growth forecasts. But this is a relationship that is in a managed decline, and we're going to continue to see both sides sort of testing those boundaries. We do know that over the weekend that Blinken did raise around Middle East security with his Chinese counterpart. And of course, the U.S. is very clearly hoping not to see the conflict in Israel, conflict in the Middle East escalate further. And also we know that it has been putting pressure on China vis-a-vis its relationship with Russia. Treasury Secretary Yellen said recently that all options remain on the table, but no action is imminent.
Lindsay, how does the U.S. election actually play in the mind of these world leaders? So how different would it be if Donald Trump were in the White House come November or come January?
Well, there's no doubt that the November election is one of the key risks to watch for the year ahead. As Jumana said at the start, the Saudi finance minister said geopolitics is perhaps the biggest risk facing the global economy, and that's on everybody's mind. And the U.S. election in November is at the heart of that, really. We've done quite a bit of thinking about what a Biden 2.0 versus a Trump 2.0 would look like. There's a great deal of anxiety about another change in U.S. leadership in the fall, and then increasingly, especially around a change in leadership that involves a Trump 2.0. There's variations in policy depending on the topic that you're talking about. In China, we're going to continue to see those tech restrictions, export controls under either administration, but President Trump, candidate Trump is discussing the possibility of a 60% tariff on China. We think that is just rhetoric, but we expect that a Trump 2.0 would look pretty much across the board to pursue transactional relationships with China and elsewhere. We've already seen this in the security space with rhetoric around what could be the U.S.-European relationship and the NATO alliance.
And Roz, at the same time, so we're expecting in 20 minutes probably a press conference from the Spanish Prime Minister to see whether he'd resign or not. He said, I think last Thursday, that he was thinking about resigning. And then there's also a lot of rumors about the Scottish First Minister quitting today.
Well, that's right. We're watching a bunch of leaders today for potential news. I mean, Pedro Sanchez, as you say, said some days ago he was thinking about resigning. We're all waiting. He said 5 days, I'll let you know. We're going to hear that shortly. If he does step down, and this is because of news of an investigation into his wife's business affairs, if he does step down, that, of course, causes chaos in Spanish politics, although arguably it's been chaotic for a while. There's no clear path then for what would happen in terms of a successor. Does that trigger an election? There's so many parties involved. Getting everyone to coalesce around a replacement is very difficult. If he does stay on, he does need to do something then to really assert his hold on power. So is that a confidence vote? Does he survive that? Does he need to, again, call an election? Perhaps, he'll call an election from the end of May onward. But either way, we're headed for a pretty chaotic period in Spanish politics.
Yeah, and then we're also, of course, watching who would replace the Scottish Foreign Minister if indeed he steps down. As always, thank you so much, both of you, for joining us. Bloomberg's Rosalind Matheson and Lindsay Newman from the Eurasia Group. Now, coming up, it's a busy week also for earnings. We'll discuss some of the key drivers behind these results. That's next, and this is Bloomberg. So it's been a busy week, or it's a busy week for earnings. Last week was very, very busy, but this week we have European banks, car manufacturers and pharmaceuticals all reporting. So for more on this, let's bring in Tim Craighead. He's Director of Research for Bloomberg Intelligence. Tim, there is so much going on. And actually, if you look at a breakdown, if you look at the various sectors, it feels like the ones that are particularly strong have been doing very well indeed.
Yeah, I mean, there's no doubt. And I have to say, this has been a particularly critical earnings period from our perspective. If you think about it, markets are at near record highs. Interest rates have been rising. We've had two earnings results period behind us that were predominantly disappointments. And what we've seen so far this time, with about 40% of the market having reported, is almost 50% are beating, about 35% are missing. That's exactly the opposite of what we've seen the last couple of periods. And about two-thirds of companies are reporting better organic growth than what was expected. So it's a good turn.
And is this on a strong economy, or is it internally they've actually done things like such as cost cutting to be more nimble?
Yeah, I think there are a number of important drivers behind this. One is volume and pricing. Look at consumer staples companies like Danone or Unilever, a chemical company like BASF. Order backlogs for industrial companies have been better, ABB, Schneider Electric, and those are notable. Banks are critical, where there's a lot of expectation about net interest margins having peaked. They are down year on year, but about 300 basis points better than what was feared. So it's across the board.
Yeah, I mean, is it surprising that a lot of these sectors have performed as they have, given the interest rate environment?
Yeah, there's no doubt. I think if you look back from last year into this year, huge rise in interest rates. We had a second war. We have China-U.S. trade issues. We've got the China property meltdown. All of that's negative. But what we've seen across the board is more resiliency across the economy, U.S., Europe, than what was anticipated. And that's starting to play through. We have seen 6 months of negative earnings revisions in Europe, and that's now starting to turn if you look at forward estimates. We think that's pretty important as we look into the second half of the year.
Tim, thank you so much. Tim Craighead there with the very latest on some of these earnings. Now, also, Bloomberg understands that BHP is considering making an improved proposal for Anglo American after its $39 billion initial offer was rejected. Now, this comes as Anglo shareholder Elliott increases its stake in the mining group. So let's get more on this with Will Kennedy, Bloomberg's senior executive editor for energy and commodities. There's so much going on. Copper at 10,000, and actually they may have to pay more if they really want this asset.
I think most people expect that they will have to pay more, that it was an opening gambit. Obviously, Anglo came back and said the bid seriously undervalued the company. So I think that's the expectation in the market. It may take time for BHP to decide what it wants to do next. I don't think we necessarily need to expect anything in the next couple of days, but there is this deadline of May 22nd where BHP has to make a formal offer or walk away, so all eyes on there. And then on the Anglo side, they too will be needing to think about how they explain to shareholders why they should reject BHP's advances and what the future shape of Anglo American should be.
Yeah, and what happens to De Beers? So this is, I guess, high-end luxury. So does it even fit in Anglo American?
That's one asset one part where I think the future is uncertain in both scenarios. If BHP were to win Anglo American, it said that it would put the diamond business up for strategic review. That I think they would stress that wouldn't necessarily mean a fire sale, but it doesn't automatically fit into the reasons why they're doing this deal, which is principally copper. Then the Anglo side, I think there's been a an idea among some shareholders and some people in the company that this isn't the perfect fit for a big mining company. It has a very different profile, as you say. But diamond prices have been weak, and it's not clear, how strong the market would be for the business. But I think, yes, under any scenario, it's something that people will be asking questions about.
Well, there's a Bloomberg scoop that's really doing the rounds of all the media, especially in France, because your team had an interview with Patrick Pouyanné, the chief executive of Total Energy, and he said actually he's looking at possibly delisting from France and looking at New York. I mean, he's still doing homework, but that was pretty punchy.
It's quite a surprising thing to hear from a French CEO, I think, that he would contemplate going to New York. Obviously, and I should say that it was Javier Blasser who first reported the story, to be fair to Javier. So it was his scoop. But it's very interesting right now because we heard similar noises from Shell a couple of weeks ago. And I think there's no doubt for those people running energy companies in Europe, they see some limitations in being listed in Europe, principally because there is a smaller pool of investors who are willing to invest in oil and gas. Those ESG qualms are much fewer in the States. So US oil companies, Exxon and Chevron, are getting much higher valuations from Shell and Total. And I think for Patrick and Wael Sawan at Shell, the question is, how do you close that gap if you stay in Europe? Now, will they actually do it? There are many reasons for Total to be in France. It is in its very essence a French company, and we should point out there's no suggestion that the headquarters is going to leave Paris. But
it's still
it's fascinating nonetheless.
It is. I'm sure he'll get a call from the president. I don't know if he will, but I could, bet my house on that. Will Kennedy will also join me on a podcast on this very subject. Coming up, we go back to talking yen and FX. This is Bloomberg. Well, sharp swings in the yen have spurred speculation that authorities may have intervened. Let's bring in Paul Dobson, Bloomberg's executive editor for Asia markets. Paul, was it intervention? Would we even know?
Two good questions. It's not entirely clear. The finance ministry in Japan is certainly staying stum on the matter, for now at least. There are some people in the market who say that the moves bear all the hallmarks of an intervention, pointing to the size of the move, the pace of the move as well, and saying that the timing would be appropriate given that there was a limited liquidity because it's a holiday in Japan today. Therefore, there would be the possibility of moving the market much further, getting more bang for your buck, so to speak. But some of the traders that we've spoken to in the market aren't completely convinced that it was Japanese intervention. They say more likely algos doing their trading things and pushing the market through some key barriers on the upside for dollar yen through 160 and then all the way down through that 155 level on the flip side. So the jury is out. What we do know is that we can do some sort of forensic accounting over the next few days to try to figure out whether that shows up in the Japanese accounts, whether there's a jump there that would point to the idea that intervention was done, and then eventually in a month or two's time we will get proper numbers that will give us more of a determination on whether there was or wasn't. But nonetheless, I think that the feedback or the fallout for markets is certainly chance to lick the wounds after some pretty wild swings in the market today.
Thank you so much, Paul. We love a bit of forensic analysis here on Bloomberg. Paul Dobson, Bloomberg's executive editor for Asia markets. Up next, Bloomberg Brief with Danny and Manis. This is Bloomberg.